Hello guys, welcome to the sharpening session for today. I'm just seeing there from Priamento, hello. So hello to you. So just to say, obviously these sharpening sessions, you will notice we have Q&A written there. So the main aim of these is to do Q&A and to answer any questions that you have and expand on topics that you need us to expand on, go into things that you need us to go into. At the same time, if you have nothing burning and you just want to participate in these sessions and learn something new of a topic that we've got kind of as a backup to go through, then we'll do that. So I'm counting on you guys. Let me just open both chat boxes here. I'm counting on you guys. Hello there to Mark as well. Hi Mark. I'm counting on you guys to let me know if you need anything. If there's a particular topic or a particular thing you're confused on, I'm happy to go through it. So you guys let me know in the chat box. Otherwise, I do have a backup plan to go through today. Now you'll notice if you follow me in any of the stock sessions or Forex sessions that I do or sharpening sessions, that one of my main things is that we are all different and we need to mold methodologies to fit our subjective personalities and trading profiles. So what I was going to go through today is understanding different elements of the UFOs and of the Autoclimate to understand how you may be stricter or not as strict on those elements depending on the type of person you are, type of trader you are. So that if you're watching this and you're extremely conservative, you know maybe what you should be doing with that technology to be more conservative when you trade. If you're somebody that's a bit more of a risk taker and you want to just take opportunities and take as many as possible and just be really, really busy placing trades, and you accept that that will lower your probability, then again, hopefully you'll know how you need to use the technology to suit yourself more as a person. The consistent is the technology. That we are using the same technology, we'll apply the same methodology, but we might tweak certain elements along the way to suit us as individual traders. Why do we need to do that? You might be thinking, I remember when I first started trading and somebody told me, or a few people told me, you can do that or you can do this. You could do this, but you might disagree and do that. And I was thinking, well, just tell me what to do. You guys are the experts, right? You tell me. But through 7.5 years, nearly 8 years of trading now, I finally understand what they meant. That there is an objective methodology that we should be using. And it actually doesn't matter which one it is, as long as you are objective in the way that you answer your questions and perform your methodology, that's what's most important. Why is it important that we have differences? Because we're different people. So if you are a risk taker, somebody that needs to be in more trades, a bit more impulsive, a bit more impatient as a person, none of which is a bad thing, it's just who people are. And we teach you a methodology that is extremely conservative and requires you to have many, many variables in the way before you place a trade. You're likely to break the rules anyway. And so you'll end up going to not be objective, sometimes follow the rules, sometimes not. Better for you to have molded the rules to suit you in such a way where you can be consistent in the way that you do that. If you're somebody that's extremely conservative and you want to have really high probability rates, and if that means you have low opportunity rate, fine, that's what suits you best. If we were to teach you a methodology and say you have to be taking risk all the time and placing loads of trades all the time, most of which aren't going to work, but the ones that do will make a lot of money, so don't worry, you'll be fine. Some people will be okay with that. For some people, it's going to make them so overwhelmed and so scared and so nervous that they'd rather not trade at all. And so again, you wouldn't follow the methodology anyway. So we need to take parts of these methodologies and understand, again, whatever methodology it is, understand how we should be using it in a way that suits us as people, so that we're much more likely to consistently do it. Consistently doing it leads to consistent results. Consistent action leads to consistent results. And the best way to create consistent action, in my opinion, is to be somewhat subjective about our interpretation of methodologies and then create a fixed plan. So hopefully that makes sense. Guys, again, let me know throughout the session whether you have questions that you want me to answer, or if I'm going through a particular topic, if you have any comments or any suggestions as well, just let me know on the chat box. I'll keep an eye on all of those. Okay, so first things first, we just need to cover the disclaimers. So I'll put that on the board. That should highlight that. There you go. Disclaimers, obviously important for you guys to understand. Not just for legal reasons that you need to read the disclaimers, but to understand that when we do any kind of these demonstrations, That's what they are. They're demonstrations of how we might think, how we might apply things, how we might use our technology. It's up to you if you ignore it completely, if you take it on board and do everything exactly, if you mold somewhere in between and you take bits of it. That's ultimately up to you. What you trade and how you trade is your choice, up to you as a trader, and we're here to help you, showing you how we do it. If it makes sense, great, take it on board. If it doesn't, ignore it, find something else. Okay, so just to introduce as well, I don't think I said this, my name is Becky, for those of you that might not have realised from what we have here. So my name is Becky, my email address is becky@traddictiv.com. Now, you can email me if you have questions after the session, if you're watching this recorded, or maybe you're watching it live and after the fact you think, oh, that didn't make sense, or I had a question about that. By all means, you can email me. I don't have a problem with that. I would prefer that you ask questions here at tradewithufos.com/Becky. And the reason for that, I'm just going to bring it up here. The reason for that is because once you go to that link and you set up a free membership, you can then come down and ask questions publicly. I always say this, we'd prefer you to ask questions publicly because then other people can see the answer. So it might be that the question you have, if you scroll down a little bit further, somebody else has already asked it, which means you already have the answer. You don't need to email us or post anything and wait for an answer, you've already got it. If your question is new and somebody hasn't asked it yet, then you're then helping that next person that may have the same question. So it's good for the community as a whole for us all to learn from each other's questions and answers. So if you do have questions, please use this page, tradewithufos.com/Becky. If you're really uncomfortable doing that, then of course you can email me. I'm not going to have too much of a problem with that. Okay, so I'm just checking the chat boxes here. Again, you guys let me know if you have any questions, but as I don't see any right now, I will continue with what my plan was for today. Okay, so what I'm going to do for this one is I'm going to bring up TradeStation to just show different examples. In fact, actually, sorry, I've just realized what I need to do just further. Just need to explain the agenda. We've said hello, and I just need to explain about simulcasting. For those of you that are watching on YouTube or Facebook, at some point throughout this this broadcast, we will cut it off. For those of you guys that are watching it on free platforms, and for those of you guys that are within the closed platform, you will continue to watch the rest. You will have access to the rest of it. Now, normally what that means is during the sessions where we do Forex, stocks, futures, things like that, options, normally it will be after a trade or two that we would cut it off. Obviously, this is a weekend, we're talking about sharpening, we're not placing trades. So normally what it would be is some way through a main point. If I've made a main point, I'll cut it off there and then I might start a new point after that. Sometimes it makes sense for us to continue right to the end and not cut off the stream. Sometimes it makes sense to do that after 10 minutes. So it's not a set timing, it's based on the content that we have in these videos. We do that because we want those of you that are watching free to get value from it and to get as much of it, as much from it as you can. And we also want those of you that are in the closed environment to obviously have more of our time because that's what we're paying for. So we're balancing those two things to make sure that we are serving everybody in the best way. So we'll cut off and I will let you know that we're about to cut off and that we're going to continue. I won't just cut it off midstream or mid-sentence. I want to make sure that you get the best from that. So that's why I needed to explain that, and then we will crack on. Now again, what's coming up here is obviously if we were looking for trading opportunities, but for us today, that's not going to be something that we're looking at. It's a weekend. We're going through more concepts and ideas about methodology than we are about placing trades. Okay, so hopefully that makes sense. Let me know, guys, if you have any questions on that or any questions as we go through. Again, I like it to be interactive, so I'll be checking the chat box a lot, seeing if you guys have any comments. You might say, that makes sense, or that doesn't make sense, or a question, or a challenge, or a statement, anything you want to do. So this can be interactive. Again, it means people watching the recording can get the most from it. Okay, so first things first, what we're going to do is we're going to start with Autoclimate and talk about different ways that you could interpret Autoclimate to be more or less conservative. So again, for those of you that are more conservative, you know how you should maybe use this. For those of you that are less conservative, you will know more how you should use this. Again, you could just decide to be somewhere in the middle either way and just do exactly what we say. But if that makes you feel uncomfortable in any way because you're either side, you'll have an idea of where you can fall. So Autoclimate, for those of you that might be very, very new to this and not even know what Autoclimate is, I'm just going to explain it very briefly. For those of you that are watching that have been using Autoclimate for maybe a couple of years now and you know in and out what it is, bear with me whilst I just recap for you guys what it is. So Autoclimate helps us answer question number one. And question number one, always when we trade, and it doesn't matter if you use this technology, use this methodology or anything else, Question 1 should always be, should I buy, sell, or do nothing? It's the first thing you should be answering. If you can't answer that question objectively, don't trade. If you're just trading based on whims and based on something you saw in the news or something someone said or something that you feel intuitively, you're not answering that question objectively, and it means that you're unlikely to have consistency in your results. So if we can answer this question objectively, whether it's AutoUFOs, whether it's Autoclimate, whether it's moving average crossovers, whether it's Elliott wave, whether it's Fibonacci retracements, doesn't matter. We should be able to answer this question. Now, Autoclimate for us answers this question in a very simple way, I think. So if we look down here, this is the Autoclimate app. And what we see on the Autoclimate app here is with different colored dots with different thicknesses. Thicknesses is a word, I think thicknesses is. So we have, if I just delete some of those arrows here, we have thick blue dots. That's the Autoclimate app coming back and saying to us there's probability to the upside, i.e. look to buy. Now that doesn't mean we just press buy at whatever the price is. I'll explain that in a second with AutoUFOs, but we at least know we should be looking to buy. It eliminates sell and do nothing, and it makes us much more focused on what we should be now doing, which is why it's question number 1. Let's say it was a thick red dot, like one of these. A thick red dot tells us probability to the downside, meaning we should be looking to sell. Ignore the other two and look to sell. Focus your trade plan that day on selling. If it's a thin dot of either color, like for example what we have here, and by the way, I'm looking at a chart of Apple just because that was the first thing that loaded on here. This applies to any market, any time frame. So this is a weekly chart of Apple, but this Autoclimate will load. Each dot represents the candle. So if you have a 5-minute chart, each of these dots would represent whether we have probabilities up or down within 5 minutes. In this case, it was probabilities up or down within 1 week. So again, depends on your style of trader, which time frames you use, but the same rules apply, right? So if it's a thin dot of either color, like we have here, it means do nothing. There's no probabilities either side. There's not enough probabilities either side. Why would we trade either way if we don't have probabilities? Now, we may use this as options traders to do some form of strategy where we straddle price and we benefit from price not really going anywhere. That would be a fair thing to do. But for most of us that are trading directionally, which is what you do in stocks, Forex, cryptos, futures, then you're going to want to answer the question either buy or sell. If it's do nothing, then do nothing. If it's a thin dot, move on. There are other markets to trade, other timeframes to look at. There's no need to place a trade where we don't have probability. Now that is a fixed thing. We're talking about different ways you can interpret this and different ways that you can use the technology. I would say if you were to decide that you were going to ignore the thickness of the dots and trade regardless, so whatever the color is what you'd go with. So even if it's a thin red dot, the fact that it's red could mean that you sell. If you do that, you would probably reduce the probabilities too much. It wouldn't just make you slightly less conservative, it would make you a little bit more reckless, I would say. But there are still things within this that we can be more or less strict on. So again, hopefully that makes sense so far as to an overview as to what Autoclimate does and why we use it. By the way, for those of you that don't already have it, Autoclimate is a free app. So whether you use TradeStation or you use TradingView, you can get Autoclimate for free. You just need to set up your free Trade with UFOs membership and you can download it. The Trade with UFOs membership, if you go to tradewithufos.com/Becky, you get it there. And then you'll get this Autoclimate app if you want to use it and help you answer question number 1. So we're answering question number 1 by helping us decide whether we buy, sell, or do nothing, and we use the thickness and the colours of the dots. Right, we're all good so far. Now, where do we have our balance here? This is where it comes to our stats. Now, you might not be able to see these very well, so I will just highlight them out a little bit. So these are the numbers that we currently see on our stats. Now, again, for those of you that know how Autoclimate works, you will know what these stats mean. For those of you that don't, I'm just going to explain it. So what these stats are telling us on the Autoclimate app is how long the market usually goes up for. That's what we have on that first number. How long the market usually goes down for. That's what we have on that second number. And then how long the market is currently going in that direction, meaning the direction that it currently is. In this case, it's a thin red dot. So it means it's been going in a downwards climate, but it's unconfirmed, so less probabilities for 5 candles. Now, why are these numbers important and where do we have sway here? So ideally, when we trade. If we want to be extremely conservative and increase our probabilities, which normally what that means is if you increase probability, you decrease opportunity. If you decrease your probabilities, have less variables that have to line up, you have more trading opportunities, but they're less likely to work. So again, we have that balance. Neither decision is right or wrong. What we teach is that if the market, let's say in this case, we're going to assume that this is a thick red dot, okay? Just for the purposes of this argument. So we're going to assume, let's just color it in there. There you go. We've got a thick red dot there. If the market would usually go down on this market, on this time frame, for 4.84 candles, let's round that up to 5, and then we were currently on 5 candles to the downside, then we've come to the end of what is usual, right? If it usually goes down for 5 and it's currently on 5, then you've come to the end of what is a usual move to the downside. Why is that important to know? Well, because if you've come to the end of a normal move to the downside, you have less probabilities of it continuing to the downside. Let's say, for example, for the sake of argument, instead of 5, it said 1. Well, that would be better, because then you have, normally goes down for 5 candles and we're currently on candle number 1, meaning based on what usually happens, we have probability of a continuous move down, which means if I get into a short position on a smaller time frame, I've got likelihood of a good few weeks of it continuing to the downside, which is great. I want to capitalize on a move down if I'm selling to make as much money as possible. And I have the room to make as much money as possible if I'm at the start of what is a usual move to that direction. So again, let me know if that makes sense, guys. Let me know if you're following. I can re-explain if you need me to, or move faster if you need me to. You guys let me know. So if we are interpreting this number to tell us what usually happens versus what we're at now, then ideally the lower the number of the current, the better. That would be ideal. Now, let's say for the sake of argument, this said 10. So it usually moves down for 5 candles, but it's currently on candle number 10. Of course, we can fall short of what is normal. We can go past what is normal. The normal is an average based on statistics. So it's not to say it's going to definitely do that, exactly that amount of candles. It just tells us what's more likely to happen based on usual behavior. So again, it just helps us with statistics, increases our probabilities, but it's not definite. So if it's 10, then first of all, it's already proved that it's gone past what is normal, but it's even less likely to continue to go down because it's twice gone what usually happens, which means it's more likely to change direction and come back the other way than it is to continue in that direction. What if it said, instead of 10, what if it said, I've lost my mouse for a second there. Instead of 10, what if it said 20? Even worse, right? It's gone even further than what is normal by 4 times as much, which means even less likely to continue. So every number that we go past the usual, the less probabilities we have, the less likelihood we have that that trade works out for us because it's coming to the end of a usual move or it's gone past the usual move. Now, why am I saying this in terms of this is something that you can interpret? Because what we see time and time again is that, of course, we sometimes do go past what is normal. So in this particular situation, the one that we actually see here, again, assuming that they're thick red dots instead of thin ones for the sake of argument, it usually goes down for 5 and we're currently on 5. The conservative trader would say, I'm not going to trade anymore. I'm not going to take this trade. I'm not going to do anything further in the methodology because I don't have probabilities stacked exactly where I want them to be. I need that number to be 4 or below before I would even think about placing a trade. That would be a conservative way of doing it. The pros of that is that you are less likely to get into trades that lose for you because you're using the technology to tell you that you lack probability or you lack as much probability. The negative side of that is, let's say, for example, this particular thing does go to 20 candles and it just continues going down and down and down. If you've been a conservative trader and you've ruled out even taking an opportunity because it's on 5 out of 5, you could potentially miss out on movements. This is true of any variables. The more variables you have, the less likely you are to have trading opportunities because it needs to check this box and 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 this box. The likelihood of a trade ticking all those boxes is less and less if the checklist is longer. It means you might miss out on good opportunities. But the flip side of that is that the opportunities that you do take, even though they are fewer, are more likely to work for you. You're less likely to lose money. So if you're quite comfortable taking risk and losing a few times in a row before you take a big winner, you don't need to be as strict on this. If you're somebody that really struggles being wrong 2 or 3 times in a row and you need to just take little wins as often as possible because it's too painful to lose, then be strict on this. So these are the different interpretations you can use of the same technology that's telling you the same thing, that enables you to adapt it to your subjective methodology, to your subjective trade plan. So does that make sense so far, guys, in terms of Autoclimate and how you can be more or less conservative based on the sustainability stats? So I've got a question there from Mark. Is normal a mean or an average, speaking statistically? It's a mean, I believe. I'll double check that with Jose, but I'm pretty sure it's mean. So it's telling us what is statistically more likely to happen, but that's not to say it's definitely going to happen, right? Averages and statistics and probabilities are just that, statistics and probabilities. They're not guarantees, which is why it's not wrong. It's not wrong at all for a less conservative trader to say, I don't care what that number is, as long as I still have a thick dot, whatever color it is, I'm going to go and place a trade. You're going to have way more trading opportunities because you're not going to rule it out based on these numbers. But you're more likely to get into trades that don't go your way because they do have less statistic probability of going that way. Okay? So, not right or wrong, but you have an objective thing. The key to this is that you are using objective technology still to make your decision. You're not making that up. It's not based on what you see or what you feel. It's still looking at those numbers. And you need to interpret them consistently in the same way. If you sometimes said, oh, it's 5 out of 5, I'll take it, no problem. And you sometimes said, oh, I'll let it go to 20 out of 5. And you sometimes said, no, it's 4 out of 5, so I won't take anything more than that. If you change your stance on that all the time, then you're being inconsistent with your methodology, which makes it really hard to figure out what's working for you and what's not. Is the methodology working, or is it just that you're changing what you do all the time? So however you interpret that is fine, but be consistent with it. My example is I don't go any further than twice as much. So if it usually goes down for 5 candles, I will not take it if it's on candle number 10. Because it's gone twice as much. I lack probabilities enough by that point that I'm not willing to take the next step. That's my interpretation. You could be somebody that says nothing more than 4. Fine. And just be consistent. Take that all the time. Do that all the time. And then you won't have problems with inconsistencies. Either interpretation is fine. So that's how you could do this on Autoclimate. That's one way that you can do this on Autoclimate, depending on how conservative or not conservative you are. Again, hopefully that makes sense as to pros and cons, why you would do it, why you wouldn't. For those of you that are conservative, you're listening to it going, well, why would you? Why would you take it further than 5? For those of you that are less conservative, you're thinking, oh, I don't care, I'll let it go as far as it wants. Either interpretation is fine, but be consistent. Okay, so that's Autoclimate and ways that we can use Autoclimate to our benefit in that way, depending on who we are and how we feel. Again, let me know on chat boxes, guys, if you have questions on anything that I've covered. And now I'm going to explain how we do it on AutoUFOs. Once I've explained how we might have one way that we do this on AutoUFOs, I will then go into the closed room, stop simulcasting, go into the closed room and continue on the UFO example. So I'll give you one example on UFOs, how we can interpret it, and then I'll continue that in the closed room. So hopefully that makes sense to you guys. Okay, so when we're looking at AutoUFOs, and again, we're on a 144-minute chart here of Apple, just because it obviously aligns with our weekly chart. If we're answering question number 1 here, question number 2 is answered on this one. And question number 2, I'm just going to put it down here. Question number 2 is, if I buy, where? And if I sell, where? Now, there are different ways to answer that question. You could be using all kinds of different indicators or patterns or combinations of those things to answer that question. Again, it doesn't matter how you answer that question. The important thing is that you answer it consistently the same all the time. So we do this by saying, if we're going to sell, in this case, we assumed we had a confirmed downwards climate. I know it actually wasn't, but for the sakes of examples, we'll assume that it was. Which means if we're going to sell, we want to look at our red UFOs, our sell UFOs. Now, of course, we combine the EMA on the bigger time frame to help us decide which UFO. And again, that's something that you could take or leave, depending on how conservative or not that you are. For us, it's a fixed thing in our methodology. But that's not to say that you have to have it as a fixed thing in your methodology if you are less conservative. Or you might want to add the EMA and Fibonacci retracements and round numbers and Elliott wave and whatever crossovers. And again, the more variables you add, the more indicators you add that all have to line up in the same place, the less trading opportunities you have, but the more probable they are. Now, in this case with UFOs, what I wanted to point out here as an additional variable that you could use is the color of the UFO. So you may notice, if we're looking at our sell orders, that we have sort of light red and dark red. Now, what's the difference? Why do we have differences here? Now, bearing in mind that AutoUFOs are showing us where we have buy orders and sell orders. They're scanning through the data and they are showing us where we have buy and sell orders that are waiting to be filled. So, the lighter color have slightly less orders. The darker color has slightly more orders. Both of them are still valid. We'll still take, you'll notice in the sessions that we do, we'll still take all of them. We don't necessarily use that as a variable to make a decision on whether or not we trade. But for some of you that are more conservative, you might say, well, if the light color is showing me less probability because there's less orders there, then I won't take the light color. I will only take the dark colors. That would be a more conservative approach, but one that increases your probabilities. Probably not by very much, but again, if you're somebody that wants to increase your probabilities and tweak it at every stage to get as high probabilities as you can per trade, there's nothing wrong with interpreting it in that way and deciding that you are going to take only the darker colored boxes. Now, you might say, and you might interpret it in different ways, and say, I'm going to put, let's say 1% risk. Let's say 1% risk is your usual risk. So 1% of your account per trade is usually what you risk. You could say 1% risk on the dark ones and let's say 0.5% risk on the light ones. So you don't have to ignore them entirely. That's somewhere in between. That's not as conservative, but still a little bit more conservative than what we might do, which is just take any of them as long as they line up with the EMA. So you don't have to include or not include. You can vary how you do it. You may say, that's one interpretation is risk, right? So you might say, okay, if I have the choice between two things and one of them has less probability, then I will just decrease my risk percentage because they have less chance of working, but I don't want to miss them entirely because they still overall are likely to work. Not as good as the others, so I might as well get involved, but at a slightly less risk. That's fine. Another interpretation might be you put targets in different places. Maybe for the dark ones, you put your safety target at 2 to 1. Maybe for the light ones, you put your safety target at 1 to 1. These are just examples. You could change the numbers, you can change the percentages. These are just examples. But these are different ways of interpreting the same objective technology that's showing you the same thing. Everybody's looking at the exact same thing, but interpreting it and using it in such a way that suits you better as a trader, as an individual, depending on how you feel about risk and how you feel about the amount of opportunities you need. You can increase and decrease those things based on how strict or not you are on these kind of variables. So hopefully that makes sense. I've just seen a question there from Mark, so I'll just answer that. Say one is trading daily, there is a small blue dot and it is past the normal. Could one go to the weekly, and if it was a solid blue, could one then be more confident that it is an uptrend? Okay, so if you're using the daily for your, so in this example, I'm just going to delete everything off the screen here so I can bring up our Autoclimate. Let's say, for example, let's assume I'm just going to draw a dot there, and it's really, really small because the point is that I'm trying to show you that it's a thin dot. It's more like a splotch there, but you know what I mean. Let's assume that this is a thin dot, and let's assume, okay, that this is a daily chart. I'm just going to cross that out and put in daily, just to give your example here. I don't want to go to different daily charts just because then I'll have to draw it again. Okay, so let's assume we're on a daily chart and we're looking at our Autoclimate and we see a thin blue dot. If that is your methodology to use the daily for your climate and therefore probably your 55-minute for your entries and for your AutoUFOs, I wouldn't necessarily be changing to a different climate or to a different time frame in order to validate your climate. You can do that. Again, this is an interpretation thing, right? You could say, I will take the trades that have thin dots on them only if the bigger time frame has a confirmed dot of the same color. So just in that example, you could say, okay, the daily is thin, but the weekly, if we were to delete that off, the weekly is thick. Yeah? So I'll only take the thin dots on the daily if I have a thick dot on the weekly. That's one interpretation. Your head is in the way. Oh, okay. Sorry. Let me move this over here. I wasn't aware of that. Thanks, Mark. Okay, so I'm going to draw this again. So let's say we have a thin dot here. Okay, so thin dot on a daily. I'm just going to explain that again whilst you can see what I'm drawing. Let me know, by the way, if my head is still in the way. It should be fine now, from what I'm looking at. So you have a thin dot on the daily, which is telling you that you don't have enough probabilities. That's what that says. And if that's the time frame you're using for your climate, again, the stricter way of being would be to say, I don't care what any other time frame says, I don't have probabilities, I'm moving on to a different market. However, the question was, could you look at a different time frame to validate this time frame? So you could go to a weekly, and let's say on a weekly you see that it's a thick dot. I'm just going to make that really big there and colour it in so we can see. You have a thick dot, and therefore that's telling you that you have probabilities on that time frame to the upside. So it's the same colour. If you have different colours, really definitely walk away from it. If it's the same colour and you have a confirmed climate on the higher time frame, but an unconfirmed climate on the lower time frame, you could indeed use that higher time frame to validate the lower one. Understand that what that means is you will reduce your probability slightly, because in the time frames you're using to actually get in or out, you don't have the probabilities lined up, for example, on that daily chart. But let's say, again, there's different interpretations. Let's say you usually use daily and 55. Okay, that's your usual trades that you use. If you don't have probability on the daily, then you could move to the weekly and 144. In which case, you're not moulding the methodology at all, you're just going up a set of time frames. And if you have probability here, then your entries now need to be on a slightly bigger time frame. It means your trades will last slightly longer, not that much longer, but they will last slightly longer than the usual trades that you take. But instead what you're doing is you're looking at one set of time frames that go together, and if you don't see opportunities, you look at a different set of time frames that go together, rather than moulding and doing, say, weekly to validate and then still doing your 55. Because if you do that, you're still lacking probabilities on the time frame that you kind of really need to have it on. So hopefully that makes sense. So Mark's saying, got the point. That was the point you were making. Good. So again, different interpretations of the same thing. You could be somebody that is very, very strict and says, I'm going to use daily and 55 all the time. I'm not going to look at other time frames. I'm not going to validate with other time frames. I'm not going to mold different time frames. It's either on there or it's not. Or you could be somebody that says, hey, I'm going to look on weekly and daily, but if I don't see enough opportunities for that, I'm going to look at daily and 55. If I don't see enough opportunities for that, I'll just go up a set of time frames. You've got your, again, the most important thing is that however you choose to do that, however you decide is best for you, is consistent. So you could say, I'm going to look at daily and 55 and weekly and 144 per market, for example. And that way you're always consistently looking at the same time frames and the same sets of time frames on everything. You could have a rule that says, I will only look to the weekly and 144 if I don't have something on the daily. So daily is my priority. But if not, I go to that. If you sometimes look at daily based on whatever random reason, and you sometimes look at weekly based on whatever random reason, it's inconsistent. It follows no pattern, it follows no rule set. So as long as you follow rules and you're consistent in your application with them, it doesn't really matter what they are. And I know that can be frustrating. There may be some of you thinking, what? I know there's so many people out there that tell you that this is the only way to trade and this is the only thing that you can do and you have to do it exactly like this. I think the beauty of the markets is that there are loads of different ways to trade, loads of different ways that you can combine timeframes or not, or combine technology or not, or use statistical advantages for some things and different in others. You can apply visual skill, you can apply patterns and indicators and news and fundamentals. That's brilliant, because it means whichever one of them or ones of them make the most sense to you as an individual, you're going to find a way to make money doing that. If there was just one way to trade with one set of timeframes, one particular methodology, one particular set of technology, it would rule out the majority of people in the world from being able to trade it. Because maybe that methodology requires a certain amount of money, or a certain time of day that you need to be around, or a certain risk tolerance. That rules out the majority of people. How beautiful is it that there are so many different ways that we can do this? So many different, even within the same methodology, so many different niches and different ways that we can mold this and put it together in such a way where it makes sense to us. Because if it makes sense to you and it feels right to you, you're going to do it. And that's the important bit, is doing it and doing it consistently. So interpret how you will, but then be defined on it. Don't change your variables. Pick a variable based on what suits you best, and that will nearly always be that way. It's not going to be anything different. So hopefully this makes sense. We've gone through Autoclimate again. Thank you for that question, Mark. That was a good question. Again, leads me to other things about how we might interpret those different timeframes. So thank you. And then we talked about AutoUFOs as to how you may use the light color or the dark color to again change slightly how you may interpret the markets and how you may place your trade. The darker the UFO, and you only have two different colors, right? It's either dark or light. The darker UFO has more orders, therefore slightly higher probability. The lighter UFOs have less orders, therefore lower probability. Both of them are fine for us to take trades. We take them all the time. But now, knowing that piece of information, if you are more conservative, you can maybe add layers into this to either only take the dark ones or use different risk percentages depending on whether it's dark or light. Have different targets depending on whether it's dark or light. Again, use it how you will, choose what you will, but be consistent. So that brings me to the end of the simulcast. So we will continue in the closed room, and what we'll talk about here is the percentages attached to the UFOs and how you may interpret that. So I'll continue on that, and those of you watching the recording of the closed room as well, you'll see that. Otherwise, guys, hopefully for those of you that have been joining us on YouTube so far, or on Facebook if you're watching it on there, hopefully makes sense what we've gone over. Again, different ways you can interpret things. We've gone over Autoclimate and how you can interpret the statistics or the sustainability statistics. We've gone over how you might use it on different timeframes as well. And then we've talked about UFOs and how you might choose how you trade based on those things. So hopefully you got a lot out of this. Hopefully it makes sense. And again, even if you don't trade this methodology, take that logic with you. You don't have to use AutoUFOs and Autoclimate if it doesn't make sense to you, but take that logic with you. So I will see you guys next time round. I'll continue in the closed room for you guys. So I will see the rest of you next time round. I'll be back on Monday morning for the overview thing that we do, the news flash that we do. Hope you guys have a great weekend, and I will see you on Monday. And Mark, I'll see you in the rest of the room. So let me just turn these things off. Takes a second, so we just have to place it and then wait a sec, and then I will continue.